Market participants are worried about the worsening outlook for the world economy. Apparently, the trade conflict between the United States and China continues to deteriorate the global economic growth. Yesterday, investors raised concerns about Germany's economic slowdown. Manufacturing PMI in Germany slumped to a 10-year low. Taking into account the latest negative trends, ECB President Mario Draghi acknowledged the need for additional monetary stimulus during yesterday's speech in Brussels. He also added that the regulator stood ready to adjust policy, but for now it would be better to wait. Draghi stated that the weakening of the European economy was solely the result of protectionist policies and the geopolitical factors. He concluded that the international trade policy of the United States and the Brexit saga were the main reasons for the euro area's economic slowdown. In the light of the current events, traders are holding long positions on the US dollar as a safe haven asset. The USD index, which reflects the value of the basket of currencies relative to the US dollar, is capped at its highs near the level of 98.70. Yesterday, some of Fed officials resumed talks about the possible key rate cut. For instance, James Bullard admitted that he argued for a deeper key rate cut to 1.75%. That's why some traders don't rule out the possibility that the Fed may cut its key rate at its next meeting. Judging by the quotes, the traders started to price in the likelihood of the interest rate reduction. As soon as dollar-yen pair managed to recoup its losses, at the Asian session it was trading near 0.37% increase, reaching the level of 107.75. What's more, traders resumed the purchases of the yen amid hopes of the success in the US-China negotiations. Meanwhile, today, Bank of Japan Governor Haruhiko Kuroda held a press conference. He stated that the central bank fully controls the economic situation. He also hinted that the Bank of Japan would carefully revise its forecast at the next meeting. The head of the RBA will also give some comments regarding the monetary policy. After the release of the weak data on the labor market, investors assume that Philip Lowe is likely to lower the key rate again. The Australian dollar is held at its lows amid such news. It's trapped in a sideways channel between 0.7670 and 7680. You are watching Market News on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals.